The following is a presentation of TFNN.
'em. Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the May 19th magnificent Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a fantastic weekend, and especially today, good luck to my youngest. She begins a very nice internship up in Washington, D.C. for a large construction company. How cool is that? She's got a place right there on Pennsylvania Avenue. A lot of action out there. Hey, look, folks, it is Magnificent Monday. Let's make sure we begin our day with clear outcomes, and my outcome for the next hour is to teach you how to master the tools for trading. That includes the tools of the mind, because when we master the tools of our mind, we begin to think like a strategist. So during the next hour, you'll hear me use terms like A to B equals CD and swing points, Gartley patterns, various candlestick signals that the bulls and the bears, what I call the sign makers of the markets, what they create for us each and every day. And each of these signals and patterns, well, they're what I call tactical tools. But you see, the real key to trading, the real key to investing, what I call mastering probability, that's where I come in, because using tactics, folks, when you think about it, the real key is just simply to get your money to work harder for you than you do for it. That's why you've got to have a strategy. And tactics without a strategy, you know what that is. That's a recipe for failure, and failure is not an option in our playbook, is it? Instead, you and I together, we'll think like a strategist, because strategists, they slay the tactician all day long. So let's begin our day with a strong mind and look at one of our tools, the tool I call love is the purpose. You know, two of my favorite rules are, number one, when you rule your mind, you rule your world. And number two, where there is no vision, there is no direction. Well, this morning's tool is love is the purpose. And in order to attain your outcomes, whatever they might be, you must have a strong purpose. And in my opinion, there is no stronger purpose than love. In fact, love becomes the purpose of our being alive. Surely there have been billions of words written about love, and none can fully capture the essence of it. Most everyone has heard or said that love is unconditional. To me, that means that love at its highest level demands nothing in return. So as you and I, as we begin our day and move toward outcomes that we've set for ourselves, know that outcomes require a vision, because without vision, there's no direction. So let me share with you an incantation, something you can say to yourself that will assist you each time you are about to have an important conversation. It could be a conversation with yourself. Maybe it's a conversation, a sales call you're making, somebody that you might interact with to attain your outcome. Say this to yourself. And in my example, I'll insert the word you at the end of it versus your real name, because I'm really reaching out to each of you out there. So my incantation, it goes like this. I want you to say this the next time you're getting ready to have an important conversation. I want you to say, I'm a radiating center of universal love, mighty to attract my good with the ability to radiate good unto others, especially you. You see, this incantation will bring about a miraculous energy force, and when you say this incantation over and over again, what I want you to do is I want you to feel it. You've got to visualize it, and as Tom loves to say, you've got to step into it. I'll leave you with this one last thought, and that is my belief that every single atom in the universe responds and yields its deepest secrets to unconditional love. Folks, when you rule your mind, you rule your world. And vision, well, vision is the direction, but love, yes, love is the purpose. And I absolutely love being here with you. It is Magnificent Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off out here right now. We've got Dow futures trading off 41 points, or trading out at 16,423. S&P futures down about 4 points, trading out at 1870.75. NASDAQ off 6 points, trading out at 35.76. Russell 2000 down a couple of points. King dollar back 13 cents, trading out at 79.97. The euro up a bit. The gold, I'll get that out, won't I? Hard currencies out here. Goldilocks up $8, trading out at 13.0180. Silver up 22 pennies, trading out at 19.55. Light sweet crude up 77 cents. That's trading out at 102.79. A quick peek across the globe out here. Let's see what we have. In the Europe, FTSE's down 25 points. We want to take a look at that FTSE chart. The DAX is basically unchanged. It's off a point right now. Nikkei last night in Asia was off 90 points, 0.6%. Unchanged in the Hang Seng, off 8 points. Different story in the Shanghai. It was down 1 full percentage point, off 22. Our call-in number is 877-927-6648. Let's begin our day taking a look at, let's go take a look at silver. Let's go take a look at high-ho silver out here, trading out at $19.55. Still struggling to get outside of that June 28th swing point out there. And that is just simply a key benchmark for me out here. Creating a little bit of a base out here. Hasn't been able to break. It has tested the December 31st swing point, so that's one little positive out there. It's gotten down to 1872. Well, 1872 was the December 31st swing point. Actually, on the day of the test, it got down to 1868. Rejected that area. But, it just hasn't been able to get any legs out here. In fact, this trend line by moving sideways, I say that's toast. Let's get rid of that. That moving sideways never gives me any kind of conviction as far as, breaking a trend. Just simply doesn't. In any event out here, what we now need to see from a bullish standpoint at a minimum is at least a couple of closes above the 1963 level out here. Otherwise, as long as you trade inside the June 28th swing point, it brings into play 1818, and of course, you know what that means. It brings into play something even lower than that, because this could be an A to B equals CD to the downside out here. And that price projection here, your 8 point, would be the August 28th high out of $25.12. The B point's going to be that December 31st swing point. 1-to-1 A to B equals CD. And this is still a possibility. Yeah, $15.78. Silver, I'm not saying that's going to happen. But it's a possibility with silver not being able to get above that June 28th area out there. So that is the clearing point. Let's go see what gold has in store for us right now. Goldilocks 2 breaking that trend line. But I say the heck with that. Let's get rid of that green line out there. Just trading sideways out here. Now what gold has at least done is tested the April 1st low. That's its swing point of a potential A to B equals CD to the downside. It's been able to hold that level. If it does crack through there, here's the downside potential. The 1-to-1 A to B equals CD takes you to 12.16. That gets you close to the December 31st swing point. Gets you the high there is 12.14. So 12.14 certainly becomes in play out here. So Goldilocks just simply moving sideways. Not a ton from a trading standpoint on a daily chart out there. Let's go check out the futures contracts here. Let's go see what's going on inside the NASDAQ futures. So remember, the NASDAQ has been the weak link to the downside out here. And I'll go ahead and I'm going to answer a couple of questions that were sent in over the weekend out here as well. So I'll get to that during this segment or the next segment. And the NASDAQ futures, now that's been a weak link. If you're watching us on TigerTV, we're taking a look at the June contract out here. Pretty well established descending price channel, all starting with the close of the session on March the 5th, and obviously the open of the, not obviously, but the open of the next session on March 6th out there. So use that as really your first touch points. Your next touch points can be the close of March the 20th, can be the close of April 2nd, the open of April 3rd out there. Pretty decent. In fact, the price broke through that. One of the reasons why it's a pretty good channel line is because price broke above this area with wide price spread. most definitely on May the 12th. And then price came back and tested that area back on Thursday. So as the markets were moving lower on Thursday, what the NASDAQ future was doing, all that it was doing was testing the descending price channel that it had broken out of. And that has got to make each of us say, something to think about here. Because really, with the NASDAQ having led things to the downside, both the NASDAQ and the Russell 2000 having led things to the downside, what is the message that, at least in the case of the NASDAQ, that it is giving to us as we speak here? Because what it did, when you break a trend line, or when you break, this is how you want to see a break of a trend, wide price spread out here. That's what we saw on the trading session of May 12th. And then what you like to see, when a trend is broken, you like to see price come back into that trend here and reject that area. And that's in essence what took place on Thursday as well as on Friday. So Friday's session, we saw price move back and reject that area out here. And as we speak today, we just simply have a sideways move. So what does that mean? It means not a lot of trading here thus far in the NASDAQ. If we come over and we take a look at the Rhodes Momentum Indicator signal, if you're listening to us on the radio or your mobile device at TFNN.mobi, remember this. We do appreciate that very much. I'll describe to you what it is we're looking at. Don't forget, you can get the archive of this show on Channel 9. Obviously, you can get it podcasted through iTunes out there. And, of course, you can watch it live. You can do that by going with your smartphone over on the upper right-hand side of the TFNN homepage out there. You'll see a little window, 3 smartphones on that type devices. Click on that. The show will stream live, and you'll be looking at the Rhodes Momentum Indicator 120-minute chart out here. Now, the 120-minute chart, you'll see a couple of red boxes and green boxes out there. Those are the Rhodes Momentum Indicators. And in this case here, and a normal market moves from red to green, if you will. And the last one that was formed out here was at 6 o'clock this morning. What it really says is that the high, both the high and the low of that session are very important. The high is 35.7875. The low is 35.6550. With price moving above the high out here, it hasn't done that yet, but it closed on a 2-hour basis above 35.7875. That probably is setting up an A to B equals CD to the upside out here. That, in essence, is really what I expect is going to happen. That's the message that's coming from that daily chart that we took a look at on the NASDAQ futures. Now, does the NASDAQ itself have to lead on the way down? Yeah, I'd say it does. I'd say the what's got to catch up, what's got to get a little giddy up and go is going to be the S&P 500, is going to be the Dow out there. So when we get back from this first break and answer one of the email questions that came about was the island reversal tops out here. As I pointed out when I did Tom's show on Thursday, and I looked at it in my newsletter on Thursday morning, there was a good chance that there was going to be an island top reversal of all-time highs. We get back. We'll go take a look at those. I'll define those for you. We'll take a look at the DIA chart and the SPY chart as well. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts.
In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Boy, I spent the weekend, some of the weekend, building a computer. Started building my own trading computer. I just need something that's got tons of power in it. And 30 years ago, I came from that industry, from the computer industry, and so with some assistance from David White, I took a look at buying one, and they wanted about almost $4,000 when it was all said and done for the unit out there. And we took a look at putting the parts together. Just seemed like it was a whole lot. Well, one, it was a whole lot cheaper to build it, and it was a little bit of fun, a lot of fun. Now, what's amazing to me, because I have surfed around and have purchased parts and so forth, it's amazing to me. I just got a email here during that break, a 1 terabyte drive. It's hard to believe, $49. $49. In fact, there's a SSD. It's about a 120 gigabyte drive for there. I mean, talk about inexpensive, how inexpensive it is. So, in any event, out here, let's take a look at the island top. So there was a couple questions that came in, and so I want to go ahead and cover this because, when I talk about tactics and strategy out here. And strategy is really being able to identify patterns, in my opinion. The tactics are about being able to identify patterns out there, and strategy is when you get confirming signals. That's one of the things. And strategy is also, and here's the real key. Strategy is always about your bracketed order at the time that you are getting into a trade out there. And that means that you've got an exit strategy on both sides of the drive. Both sides of the drive, you have a exit strategy. And you got to do it. You've got to do it prior to entering the trade. It is when you are most objective out there. If you don't know, if you don't have an exit strategy, there's no reason to get into a trade out there. In fact, the emails that I get or that I see where people get upset, sometimes they get upset with whoever they're upset with. Ultimately, we're only upset with ourselves, right? Because we're the ones who are in control of our decisions out there. The ones who get most upset are the ones who don't do that. In fact, they get into a trade. They don't use proper money management out there. They don't understand money management, and that is the most important strategy of everything. You should, if you don't utilize or understand the power of 1%, just do yourself a favor. My newsletter service, Mastering Probability. Look, you can put a credit card down. It's basically a deposit for 30 days out there. There's a 90-minute workshop on that explains this entire strategy out there. Couldn't be more detailed, couldn't be more specific, and if you go learn that and you follow that, you'll be in great shape. Now, inside of the SPYs out here, what the SPYs, the Diamonds, and the New York Stock Exchange did last week on Thursday was they created an island top reversal. Now, we're looking at the SPY here. Now, the key level is the low of May 12th. That price point, write this down, 188.75, okay? That becomes an area of demarcation, 188.75. You see, the high of the trading session on May 15th is 188.72, a 3 cent gap there. Is that important? Yeah, that's what created the island. When you create an island, I don't want price at all touching any part of any of the candle or candles that created that island. That means the low of May 12th, obviously it's not going to be the low of May 13th because May 13th becomes the high, or in this case here, the low of May 14th, which is 188.79. We have a 3 cent gap out there. If you don't look at it closely, if you don't hover your your cursor or what have you on each candle, you wouldn't pick up on this. But inside the SPY out here, this is an island top reversal. Now, to me, I don't care if price gets back and it tests the low of May 14th out there. And as long as it rejects that area, as long as 188.79, there's no close inside there, then it still is a valid island. Now, look, it's also telling you there is significant selling pressure out here inside of the SPY. And you can't really, in my opinion, depends on what kind of trading style you're at, but you really can't go long the SPY until you see it close above 190.42. That also means you got to be on the lookout for whatever that next reversal signal may or may not be out here. But until we see that, this is as bearish as you can get. Now, where it really also took place was inside the New York Stock Exchange, as well as the Dow Diamonds out here. New York Stock Exchange also very clear. If you take a look at the low on May 12th out there, you're looking at 10,639.72. The high out here on the 15th was 10,636.45. There is a gap out there, and that gap, that $3 gap or less than $3 gap, is very important. That is an island top reversal inside the New York Stock Exchange. The last one that we got out here was back on December 31st, as the New York Stock Exchange was making its high out there. You can see price came back and it tested that area back here in the middle of January, and then it finally gave up. Finally went down to about the 200-day exponential moving average. I suspect we're going to see the same kind of outcome take place, but we may see more of a counter-trend rally this morning. 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow trading off 19 points, trading out of 16,472. S&P off 2 points, trading at 1875. Composite off 5 at 4,085. Russell 2,000 down $2.80, trading out at $1,100. And we've got Microsoft down 30 cents. Apple up $3 and change. Leading the charge, the upside is Apple. Right behind them, Intermune Inc. ITMN is a ticker symbol, up about 6% this morning, up $2 and change. Looks like a phase 3 drug approval or something for I can't even see what it is for. In any event, it is, looks like positive news, and it's trading to the upside. Netflix up $1.75. Zendesk, Zendesk, Z-E-N is the ticker symbol, up 13% out there. Good Zen there going on. Aceto Corp, ACET is the ticker symbol, up 9% this morning, up $1.52. Go is going this morning, up 7%, up a full dollar. AstraZeneca out here, down about 10% right now. You got AstraZeneca. Who's the buyout between AstraZeneca and it's on the tip of my tongue. All right, screw the tip of my tongue. We got Amazon.com down $2 right now. Campbell Soup Company, down 5%. Let's see what's behind that move out here. Looks like they released numbers. Let's go see if we can find out what they generated here. Earnings per share about the same, 58 cents versus 57 cents. Net sales, $1.97, not $1.97, $1.97 billion versus 1.96. Pfizer, thank you. 1.96 billion out there. And getting hammered here this morning. We'll see if there's any volume behind that move. Mercado Libre, MELI, off 2%, down $2. DirecTV off a couple of bucks. Buyout going on between DirecTV and AT&T out here. LifeLock, LOCK is the ticker symbol. That's down 10% out here this morning. We hear their commercials all the time. At least I hear them all the time. And don't know what is behind the move, but it is down 10%. We'll take a look at that. Nordstrom, JWN, boy, what a strong stock this was on, I believe, on Friday out there. So we'll take a look at it. It's one of those stocks we're also paying attention to for a potential island reversal. However, I think it needed to gap down much, much more than that. If we take a look at, so New York Stock Exchange, we saw the island reversal. I want to go ahead and finish this off. We'll go over to the ETF. The ETF for the Dow Diamonds out here. That way it covers the questions that were sent in email. If we take a look at the Dow Diamonds, real clear, it's much clearer, I think, because visually it stands out a little bit more. And if you take a look at the low from the trading session of May 14th out there, the low is 165.92. The high of that very next session is 165.87. So it's a 5-cent gap out there. And that created the island. Well, that created the second half of the island. The first half of the island was created on May 9th. The high was 165.78. Gap up in the low of the next trading session on May 12th, 166.28. That's what created the island out there. So you've got one of the most bearish reversal patterns out there inside two of the ETF. Now, it's easier to form inside of a it's very difficult to form inside the futures contract, but it's doable. But really difficult. But and you got to pay. If you go back and take a look at the SPY chart or the diamond chart. Just do your own work and see whether or not those islands that it creates, whether or not they had any meaning. That will make it a little bit easier for you to determine how it is that you're going to go ahead and trade things out there. So let's go take a look at some things here that are moving and grooving. Let's take a look at Apple. That's leading the charge to the upside here this morning. That, as we know, has resistance right around, 597 or something like that. Let's go take a look at it. It's trading out at 602 out here. Now, in the case of Apple, one of the things, it's 5. Let's get the exact number out here. It is at 5. No. Here, I've got to come down right here. Yeah, 594.59. That's the number. 594.59. That is an old area of resistance. It's worked as an area of resistance. It now may become support out here. And if it becomes support, what it's likely to do is travel up to the 626 to 656 type area out here. And I think that is the more likely outcome. It's trading at 602 right now. It is much more likely outcome that it's going to trade at least to the 625 level. That happens to be the 1.618 expansion of its most recent set of swing points. Now, in the case of Apple, it actually formed a island bottom pattern out here. So speaking of islands, if you take a look at the trading session, January 27th, big gap down, big volume, trade sideways for a period of 3, 6, 7, 8 sessions out here. And on the trading session of February 7th, it gaps up. That little gap created the island, a little chain of islands out here inside of Apple. That obviously, you can see the importance of the message of an island reversal type top or bottom out here. And in this case, when it made the move out here on the trading session of April 28th, I think that may have been an earnings date. I don't recall if it's an earnings date or not. It doesn't really matter what it was. What it was this. It was a wide price spread and accelerated volume coming into a butterfly pattern, a 1.272 butterfly pattern. And so tactics would say you'd sell the thing. And, of course, tacticians get what? Slaughtered by strategists, because the strategy would say, hold on a second here. He just came into a technical pattern, to a end point. I don't know what to really refer to in this case here, because it is a butterfly pattern. It would be the D point. It would be the D point of the A to B equals CD, and you're coming in there with gusto and wide price spread, and it's basically saying, I don't think so. Yeah, I can see where it's rested here, okay, which it has done, but it never failed. And by failed, I mean it never got outside of that April 28th candle session. I mean, until you break the low of that, which is in essence a version of buying a breakout out there, you know, the message is I still want to go long and strong. And that's maybe another one of the reasons why when we took a look at that NQ chart, that daily chart on the NQ out there, why it did, on the daily chart came back and it rejected a resistance or a support level out there. And that's why I believe, and that's why I wrote in the newsletter this morning, there should be more bounce in this market out here. We'll see if that unfolds. Doesn't have to unfold. There's some things that could easily get in the way out here. But in the case of Apple, what it was also doing on that trading session when it moved up to that 1.272 butterfly, and you may say, hey, what's that butterfly actually look like? This is what it looked like here on the butterfly as it was making that pattern. So it's just like about that. Nice 1.272 expansion of the set of swing points out here. It also got into that extreme overbought condition. So all that Apple's really done since that time frame is worked a little bit of that oversold condition off by moving sideways. So I think the more likely outcome is some real resistance area that is at the bottom of October 5th out there at the 651.28-ish. Is that the number? Let me make sure I get the right candle session. October 5th. So, October 5th, 651.28, 21 million shares. The very next day, 21 million shares to the downside. So expect that to be the resistance area for Apple. Let's take a look here at Campbell's Soup. Let me see what's going on inside Campbell's Soup here. It is down about 4%, $2. Let's go see if there's anything behind this move. Ticker symbol here is CPB. Campbell's Soup, gapping down. Let's go see what it's gapping down into. Almost creating a huge island out there, but it did not. Let's go take a look at it. Let's just clean up this chart here. So it's moving down into its last breakout area. Now, in this case here, support, there's going to be really two levels of support that it is going to try to tend with out here. So in those levels of support being from the trading session, the high of February 13th out there, 41.17. Very next day, gaps up with volume, 5 million shares. So a nice little sign of strength. This morning here it's come back to that sign of strength out there. Now, in this sign of strength area, you can see Campbell's Soup coming off of a kind of a little wacky out here. I'm not sure which soup they call this one, but Campbell's Soup had a couple of real signs of weakness here back on August 29th, 2013, as well as a gap down with some volume on November 20th. 2013. But, boy, it's got some giddy up and going. There was some signs of strength inside this equity back on December the 4th out here. And that looks like that probably completed an A to B equals CD to the upside here when it did that. Yeah, it did. It made a little over 1-to-1 A to B equals CD to the upside. But it's got this sign of strength out here on the trading session of December 6th. It looks to me like this thing will probably hold inside of this area. Let's go to Mark in Denver, Colorado. Mark, thanks for calling. Thanks for holding. How you doing this morning?
Good. How are you today?
Excellent. Did you have a nice weekend?
Great weekend. Thank you. You?
Did it? I had a good weekend. I was talking with somebody. I think I was up kind of early. I'm up early most days, but I think I was up particularly early yesterday morning. I think I turned on the news at around close to 4:30, 5 o'clock in the morning out there. Of course, most people would say, what the heck are you doing up on a Sunday that time? And did it snow last week in Denver?
I think it was more in the, it did. We got a little more, it was a little more up in the foothills than it was in the actual city. So
now, is that unusual this time? Is that unusual this time of the year in this kind of late in May to snow in Denver?
Getting pretty late, but I've been here most of my life, and I actually even remember a snowstorm in like early June. But
really?
typically we're done in April. Late April, but it's getting late to have any more. Hopefully we're done because we had to shut down the sprinklers and all that stuff for freeze warning and stuff.
Wow.
Last week, so yeah.
Oh. Well, and what's it like today? What's the weather for? 90?
It's going to be 80 degrees and sunny today.
80. Gotta love it. You gotta love it. You wanted to look at the IWM. Tell me what you're looking at, how I can assist you.
Well, so a couple things. I was listening to Tom a little bit late Friday afternoon after the close. I did a quick short-term long option trade on the IWMs, kind of when it was testing the lows of February on Friday, and it actually tested it got close down to that 107.27 with a 107.44. It did it on 75 million versus 60. Tom said he didn't like the fact that it got so close but didn't touch it, because it came right up to it and then stopped. But the thing I had a question of is the IWM tracks the Russell 2000, and when you look at the Russell 2000, it actually tested that particular number and closed above it. So I'm curious as to what your thoughts are on that.
So if you go first just back to great observations. If you go back and just take a look at the IWM itself and the thought process there, it's a very valid thought process. When you come into a swing point, especially when you're trading into the swing point, and you're doing it with volume, and you haven't busted out the lows there, the signal is that you're going to go attempt and do that, maybe try to bust through it. And so the only thing that's going to really change that outlook is if you were to see some type of larger sign of strength coming out of there. Now, the candle session that it formed on that prior day, May 15th, you didn't mention May 15th, it actually qualifies technically as a hammer candle out there. If you just look at the individual candle. And then the very next trading session, like you pointed out, it tested the low here from April 15th with lighter volume. It tested the trading session from February 5th with lighter volume. So the move or the short-term trade is most certainly valid. You know, the question is, especially in something like this, you know, are you better to take something that's been so beaten down for maybe the potential that it's going to also take off topside, you know, from a percentage standpoint versus the S&P and the Dow out there? You know, and so did any of those thoughts go through your mind, or you were just really trading?
Yeah, it looked like, I mean, the other ones were closer, you know, I mean, the last week where they were testing the highs where the Russell was testing the lows. So my thought was if there's a rotational market going on, the money's going to rotate into the IWMs and the Qs. So that was my thought process. So, yeah, that's why I kind of moved some I like it. With that idea. And it's actually it's working really well this morning. I mean, I got near the lows on Friday, and, you know, in an option trade, that's almost a pretty good move for a quick week call option. And so I was just thinking, you know, but I was wondering what your thought is on the bounce here, what you're looking at for like.
Well, the interesting thing, Mark, is that back on April 15th, I went through that same logic. And I had my clients in the newsletter take a long position inside of the NASDAQ. So the NASDAQ had been pushing lower. It was kind of a similar type situation as to what you've pointed out here in the IWM. And my position there was normally I would go ahead and play the strength on a bounce. And my position was that rubber band had stretched so much that it was overdone, it was overcooked, and maybe we would see the larger bounce take place there. And we stayed in that trade until last week, Wednesday or something like that, and got out of the trade. I can't remember which day it was exactly. And so you know, I made that same type of decision that you just made here inside the IWM. So we're kind of thinking alike there. And you know, the deal it's pretty simple. As long as you're using, you know, stops, you're in pretty good shape. In this case here, obviously, you took a call position, so you got to stop in place no matter what.
Right.
So I like it. Now the question is going to be, where do you take the trade to?
Right, and I'm kind of thinking. It looks like if I draw a downtrend line on the IWM on the through most of the tops from the last few months, I'm looking at it coming down into about 110.50, 111ish. I don't know what your thoughts are.
I would say, you know, I think that May 12th swing point is your key. If it closes inside 110.51 and it does it with more than 76 million shares, the top area should be tested right around the 113 mark.
Okay, thank you.
Alrighty. Hey, thanks so much for calling. Have a great day.
Thank you. Bye-bye.
Folks, we'll be right back. Dow's off 4 points, S&P's up 2.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 21. S&P is kind of flat, up 70 cents. The composite's the composite, and the Russell that are leading the charge to the upside. So, Mark from Denver had called. We were taking a look at the IWM, and one of the things that he pointed out was that the Russell 2000, the actual index, did test the lows of February 5th out there. That price point was 10. 1082.72, and on Thursday that moved down, got to 1082.53. Now, I mentioned in the IWM that it had formed a hammer candle. Same thing in the index as well. It's always a candle, and a hammer candle is a one-day reversal. You know, where you like to see hammer candles form are areas of support. Now, in this case here, a swing point becomes a potential area of support. It's where it's a major intersection inside of the market. Now, obviously, from a price standpoint, from a volume standpoint, ideally, you'd like to see those levels get tested with lighter volume out there. And it's 100% move of a move. So all those are all the logical things. If you're putting down on a pad of paper before you take a trade, you know, on one side you've got bullish, the other side you've got bearish out there, and you get rid of the news factor, which I think in order for Mark to take his position out there, he got rid of what everybody else was saying. He just looked at the chart and he went ahead and placed the trade. And that's really, you know, one of the freest things that you can do is to get rid of the noise in life, right? Get rid of the clutter and just focus on what it is. Take the information and make your decision. When you use proper money management, which means you don't risk more than 1%. Look, when you know what your trading expectancy is, if you have a high trading expectancy, there's a mathematical calculation that you can go through that determines what the amount of risk is that you should take, and it's more than 1% out there. So there are traders that truly understand risk, that this nothing more than a math exercise. But if you just start with just simply the 1% rule out there, no matter what it is you're trading, you cannot get harmed. You have to have 380 trades or something like that in a row to lose all of your money out there. And you're doing it 1% at a time. And people are always amazed. They say, how can you make any money 1% of the time? Think of it as risk. Don't get rid of that illogical. Put it on paper. That's the whole key. Put it on paper is really what it's all about. So the problem with this hammer candle, as the Russell 2000 index was making, I don't like it when I have to, because what I do is I fill in the gaps. I do it visually, mentally, and really if I fill in the gap here, you know, this doesn't qualify as a hammer candle, meaning the gap from the prior session. The reason being is that the body of the candle is going to be too large. You know, the wick of a hammer candle needs to be at least 2 times the size of the body out there, and the larger the bodies are, that also, you know, is a bit of a concern. So what we can see here about the Russell 2000 index, really getting back in a long version of how I'm going to get there. Right now, what you've got is the 50-day exponential moving average. That is the black line that is on my screen out here, priced out at 1106.06. You're trading at 1106.41. That really is the area that you want to be paying attention to out here. If it can close above it, that'll be positive. If I go and take a look at the Russell 2000. Now, again, this is a little bit of a delay here inside this chart. We take a look at the daily TAS market profile out here. The other thing that you got going for you on this trade here, Mark, is at 1092. That level is held as support. That was a support level inside of the Russell. The point of control, it's where you've got the largest amount of congestion out here, 111160. So at 111160, that could be a spot where you want to start taking a look at maybe tightening up your trade out there. Folks, it is magnificent, wonderful Monday out here. Thanks so much for joining me. Stay tuned for the Money Masters show, or have yourself a great day. I look forward to seeing you very soon. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.